Hello folks, I recently did a video about the rising costs of car insurance in the UK and gave you some tips to kind of help you make sure you're not paying too much for your car insurance. But one of the main things that kept cropping up time and time again in the comments were people asking, why has it gone up? So let's look at the reasons why everything's gone so bananas so quickly. Well, the first one is rising claim costs, and there's several reasons for that. Not only has it been more difficult to get hold of replacement parts, but when they have been available, the price has been through the roof. Even things like raw materials, things like paint, things like metal, it's all gone astronomical. And that availability of parts has hurt particularly hard. One of my neighbours over the street had an accident about 2 or 3 months ago, and she's been in a hire car for the entire period. Just got a car back last week, been waiting for a part to come from Audi that Audi couldn't supply. So she's had a hire car for like 3 months. If you've hired a car in the UK in recent times, you'll know that can easily be 400 quid a week. She's had one for 3 months. Not having parts readily available, something that they would have previously gone and got off the shelf more or less and had the job turned around within a week, could now take months. Labour rates have also gone up. Obviously, inflation's been massive in recent times. All the garages are putting their labour rates up. And don't forget, when you get an insurance job, there are one or two that take an insurance job, much like when you go and order a wedding cake. A cake costs 100 quid. Once it becomes a wedding cake, it costs 300 quid. The same thing happens to insurance companies all the time. Personal injury claims have increased. The cost of dealing with those injury claims, again, has increased. And insurance fraud is massive. There are organisations that arrange for accidents to happen in order to claim from the insurers. You've probably heard of people, jumping out in front of cars when they're stopped at traffic lights and then, getting up and sort of rubbing their backs and that kind of stuff. People suddenly slamming on their brakes in front of people on motorways. All that kind of stuff is absolutely rife. It's a disaster for the industry, and it directly affects the amount you pay for your car insurance. Uninsured drivers directly affect the amount you pay. The MIB say that last year uninsured drivers in the UK cost 500 million, £500 million, because people don't pay their insurance. Now, it's one of those chicken and egg things. There are some people that will say, well, I can't afford to pay any insurance, therefore I'm not. And if they get caught, most likely it's a 300 quid fine and 6 points on their licence, and they may be willing to take that risk. I personally think if you can't afford to insure a car, you can't afford to run a car, therefore don't have one. But lots of people think, sod everyone else, I'm just going to go ahead and drive with no insurance. Now, the value of second-hand cars has gone through the roof in recent years, so when a car's written off, insurers are having to pay much more for that car than they would have done previously. I'm sure you know of cases where someone bought a car, had it for 2 years and then sold it for what they bought it for, or even made a bit of a profit on it. All that follows through to the insurance industry, because just like that bloke who bought a car, held on for it for 2 years and then sold it for what he paid for it, there's someone else that bought that car, wrote it off after 2 years and almost got what they paid for it. One massive change we've seen actually comes from the regulators, from the FCA. They banned what's known as price walking. Okay, price walking is that thing where you used to go onto one of the comparison sites, get a cheap quote, go with that insurer for a year, then they'd invite renewal and they'd put the price up. Now, people like me would just shop around every year, chop and change every year. But if you remained loyal, you ended up paying more as the years went on. The FCA said that's not good enough. You can't punish loyal customers. What they then did was put in tons and tons of regulation around pricing and the controls on pricing, even limiting how profitable insurance products can be. You might think that all sounds fantastic, but it's not. Where I used to work, for example, we had just over 30 staff. We had one person that dealt with compliance, that was fine. To adhere to the new regulations, we probably would have had to have 3 full-time staff purely dealing with the compliance. And the responsibility for that goes up and down the distribution chain. So from insurer to broker to comparison site, all of them are responsible for everyone else in that chain. And the cost and the work involved in doing everything they want in the way that they want it is unbelievable. What it also means is insurers can't make a lot of profit on one product. So it may be that they actually made a loss on your car insurance or just broke even. Break even on car insurance, by the way, very, very difficult place to be, and a lot have failed to do that. A lot don't even try and do that, but they would make money on things like your breakdown cover and your legal expenses cover. They can't do that anymore. If a product is too profitable, they either have to give you more cover or charge less for it. And that one thing, which might have only been a small amount of money, that's the thing that's allowing them to do the car insurance for that much. Now, all this coming together at once has just meant that all those cheap deals you used to get in year one have vanished. They've disappeared. They've gone into the ether. Brokers and insurers that use comparison sites to get your business in pay a hell of a lot to the comparison site for doing it. 50, 60 quid a time when you go on cover through a comparison site. They were previously doing that at a loss in year one, knowing they could put the price up in year two. And of course, nowadays, if you phone and make any kind of change to your policy, they'll put an admin fee on it, even when you're doing the admin yourself, which is ridiculous. But that's to try and make themselves whole, because they had to discount the price in the first place to win your premium, because it was very, very competitive at new business. It's not anymore. They're all on the same playing field pretty much. So no one's really competing to win your business, because we'll probably lose it after a year, rather than previously thinking we'll make a loss in the year one, but we'll hold on to it for 3 years, and at the end of it we'll be up on it. The long and the short of all this is, it's now much more difficult for brokers and insurers to entice you in the front door by offering you a good price, and for them to just go about their daily business costs significantly more than it used to. And all of everything I've spoken about before has meant that the market's contracted. There are now fewer insurers in the market. Some of them have pulled out because average claim costs have gone through the roof. They don't fancy it. They only see that continuing. They can't see any real way of counteracting that. They've looked at market conditions, regulation, etc., and thought, do you know what? Let's just stick to our other lines of business. We won't do car insurance anymore. Goodbye, good luck. Whenever a market contracts, it means prices go up. It's just the basic laws of demand and supply, really. And then finally, some of it just comes down to some insurers being a bit greedy. There are some that made loads of money during COVID. Car insurance is not a line of business that insurers tend to make money on. Certainly not significant money, but it's a great way of getting their name out there. It's a great way of taking in lots of premium. And a lot of insurers make their money via investment of the premium over the year that they've got it. The actual how much they bring in premium, how much they pay out in claims is often alarmingly close. During the pandemic, despite the fact that car thefts were still happening, vandalism was still happening, people were doing far fewer miles on the roads, and that meant far fewer road traffic accidents. As such, a lot of the car insurers made a lot of money, and they're not used to doing that on that line of business. Now, everything's changed. Pricing's gone through the roof on everything, and they've now just had one of the worst years on record, and they're thinking, hold on, we'd like to be making profit again. Let's just whack all the prices up. Obviously, some of them are big enough to do that and get away with it. But in my personal opinion, car insurance pricing has been a race to the bottom for years, and just with this extraordinary chain of events that's happened all at once, i.e. the pandemic, the shortage of parts, increase in pricing, everything else that's gone on sort of politically, globally, combined with these new regulations from the FCA, which I always said, as did a lot of my peers in the insurance industry, by the way, I'm not a visionary here, a lot of people said the same thing, all these changes are going to push prices sky high. Sure enough, they have. And those fair pricing regulations go through to home insurance and everything else. So prices there will also go up. I don't think they'll be as high as car insurance, simply because with home insurance, you don't have the issues with uninsured drivers, you don't have the issues with supply chain issues so much, but material costs have certainly gone through the roof on home insurance, pardon the pun, and those regulatory costs are just the same. It's insane how much they have to do, how much the broker has to do. In my book, they're the main reasons pricing's gone up and why it's all happened so quickly. Probably more uninsured drivers going around, probably more people trying to commit fraud, probably more theft going on than we've seen in a long time, huge increases in accident repairs, people using accident management companies instead of going directly to the insurer to make a claim. All these things put money onto the premiums, and then some car insurers have pulled out whilst others are taking advantage and being greedy. I'm not here to defend the insurance industry at all. I'm just giving you my thoughts and a little bit of an explanation, other than the one you'll sometimes see in the press or down the pub. There is a lot more to it, and there's a lot that people don't understand. And when everyone says, oh, it needs more regulation, guess what? You were paying a lot less when there was less regulation. Hope you found this one useful, folks. Please give it a thumbs up. Please subscribe to the channel if you haven't already done so, and I'll catch you on the next one.